People are joining now. There's Diva.
I guess this takes. Hello, 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 hello.
Hello. Recording in progress.
Hello, everyone. Welcome, welcome to the Divas Two Cents TV show. And for those of you that have logged on or are logging on, if you like this content that Divas Two Cents shares with you all the time, I urge you and I ask you to please like and share this content because there's someone out there that really needs to hear this, okay? So we are live and I'm so happy today because I have the pleasure today of having a special guest that is with me today, who I'm going to introduce to you. Her name is Monica Mendez, and she has 17 years of experience. She is an EA, an enrolled agent. She also is a Main Street certified tax advisor as myself. So as you know, we've got a lot of strategies that we constantly train on for the viewers as yourself, especially some of those realtors that are out there that are constantly asking for tax strategies. Monica, 17 years of experience, and she's not only a realtor, she's a tax advisor and a real estate investor. Are you not, Monica? So how about if you say a little bit about yourself now that I started?
Okay, my name is Monica Mendez. I have been 17 years working with the IRS, laws and regulations, and I am a real estate investor as well. And I have my license as a realtor, so it has been a really big journey for me. But I'm here to share all the information that we can share on the time that you have for us.
Oh, great, great. Well, I know there are a lot of realtors that told me that they were going to be asking for some advice. They were going to have some questions. For those of you that are out there that have questions, if you can please do me a favor, put them in the chat. We have someone monitoring the chat that will be able to answer some of your questions for you. Mainly, most importantly, the real estate market, as we all know, has gone crazy this year. As a realtor myself, I realize that a lot of people are worried about whether should I buy, should I sell, the interest rates are going up, what's happening. So Monica, what is it that you're seeing in the industry right now that our viewers should know from your perspective?
Okay, I see people scared. I see people scared of buying. I see people scared of selling. So I tell them, okay, you need to know what's going to happen to you. Like, why do you want to buy a property? Do you want to live in it for how many years? What are your plans with that property? And then we can strategize, we can plan. And some people can still buy in this market even though it's high interest and everybody's scared. But I tell them, okay, let's see what do you have. If you are investing, that's different, completely different. You need to know your numbers and able to, so you can see if you really are gonna get profit on the property or you're just gonna be losing money. But if you are buying a property in North Carolina and you are worried about the interest, you just need to stop worrying and need to see how much are you paying on rent because the rents are really going up really bad. Some properties are really like clients can even afford the properties now. Before we were able to buy 3 bedrooms, 2 baths for $50,000 in the main capital of Raleigh, North Carolina. Now those properties are around 500, 600, 900,000 just because some people bought it at the right time. Now they can sell it for so much money and they are making so much money on those properties. So I tell them, don't be mad, don't be scared, and let's move on. Let's start working on your plan so you can get your property.
That's true. That's true. Now, everybody that knows me knows that I always say numbers tell stories. So what do your numbers tell you? So if on a personal side, what do your numbers tell you? Are you in debt? Are you making money? Are you saving money? But as a real estate investor or even a regular individual that wants to invest in real estate, don't be afraid of the numbers. I always say they're only 10 digits, 0 to 9. So don't be afraid of them. It's what you do with those numbers. Now, Monica, you go out and you buy a X amount of $1,000 piece of property and you're thinking that it is an investment. A lot of people out there, you hear a lot of gurus out there saying buy real estate because you can be rich, you can, generational wealth and whatnot. But what advice do you give for someone who is a W-2 employee, maybe? Okay, or maybe just has an LLC. And if you look at their financials, they really don't have much of an investment strategy on that side of their balance sheet. So what advice do you give someone that wants to get into the investing of real estate from a numbers perspective? What should they be looking for? Should they buy the cheapest home around? And you tell us.
I will tell them, you get what you pay for. Like when you are buying cheap, you're just gonna sell it, and it's gonna cost you a little more to sell it, and you don't wanna make as much profit as if you buy a property on a decent neighborhood that is growing and people wants to live in. Some people are making so much money on those properties that you went out and bought like a really cheap property. So you need to know your numbers. And if you are starting to invest, the worst thing that you can do is think that you're gonna make so much money, because when we start investing, everything goes wrong. Everything falls apart. Like it's like the universe doesn't want you to do it, right? So everything starts failing. So you need to find somebody that can help you, somebody that can guide you, somebody that can tell you, okay, this is gonna happen. This is how much money you're gonna spend, and don't worry, you're gonna make the money. But remember to, now that we are talking taxes and real estate, remember to plan for taxes as well. Some people, they sell you courses to get into real estate. They tell you that you're gonna be making $30,000, $50,000, but they don't tell you how much you have to pay on taxes once you sell the property. So sometimes you just start buying, start selling, and when you come to us, it's too late to actually plan for something. So I will tell you, before you start investing, get a really good real estate agent that knows what they are doing, somebody that is investing on whatever you are thinking on invest. Like you want to buy and hold, you want to buy and flip. What is the strategy that you are going to be using? Then find a really good accountant, a really good enroll agent, somebody that can tell you how much are you actually going to be paying on taxes for the property. Because not everybody tells you, or not everybody knows. That's another thing. If you don't have a person that knows taxes and real estate, you can go to anyone and they don't gonna tell you, okay, this is how much you're gonna be paying. And when you come to me, it's too late because you never plan for all those taxes. And then you're gonna be like, oh, this is not worth it. So much work I did and I didn't make any money. But because you didn't plan how much you're gonna be paying on taxes. So talking on taxes and real estate is really something that we need to plan. Right. You need to plan.
Right. Now, one thing that happens all the time is you may have a first time, let's say a first time flipper. Let's say they buy a home, they think they're going to flip it, and they do. They buy it at a good price, they flip it for a good price, and now they come to the tax office with the statement, a HUD statement that says that they're going to make like $100,000 in profit. And then they say, well, I needed the money because I was going to buy another one. Well, if they had a good tax strategy person behind them, they would have known that they had avenues that they could have taken. They could have taken a 1031 exchange. If those of you that don't know what that means, it's just flipping one property for another, moving the profits of one and moving it into another. And it's tax free. You're not going to pay taxes on that property that you sold. But after the fact, there's nothing you can do. I mean, even with a 1031 exchange, Monica, right? There are restrictions. There are rules and guidelines that you have to follow. Has that happened to you, Monica, in your business?
Yes, too many times. People come to me, they say, oh, I bought this property, I sold this property, and then I went out and bought this other one, and they don't have the money to pay the taxes. So when they find out how much money they actually have to pay on taxes, it's really bad for them. It's a sad story. Sometimes I have to tell them, okay, here is the clinic, now you can clean up and let's move on. But I have seen so many people that get bad advice. They go to seminars, they go to places where they tell them, okay, you will be rich with real estate, You can become really rich with real estate. You're just gonna buy and sell properties, and then you don't have to worry about anything. But the amount of money that you are e- exchanging there, it just caused the IRS to look at you. Okay, you are buying a property for 250,000, 350,000. You are selling for 450,000, $500,000. So you need to report all the money. You need to show the IRS that you are who you say you are, and you need to do a lot of stuff that you don't even know what you have to do when you are buying and selling.
Yeah.
When you are buying and renting as well, when you go and apply for a new loan for a house that you're gonna rent to somebody else as well, you need to show proof where are you getting your money. You need to show how much money are you making, your credit score, how much money do you have in the bank. So you need to show a lot of stuff so they can allow you to get the money from the bank. The bank is going to lend you money as long as you can show proof that you can repay the money, right?
Mm-hmm. Absolutely, absolutely. But I mean, I speak from experience. I had a 1031 exchange, didn't really understand it years ago, and I missed a deadline. And because I missed that deadline, it cost me about $83,000. So I know when people tell me they want to get into real estate, the first thing I tell them is, are you flipping it? Are you keeping it? Are you going to live in it? As you know, there is an exclusion if you're a home buyer and you live in your home 2 out of the last 5 years. You don't have to pay those capital gains. There's an exclusion in the tax law that helps you. 250,000 if you're married, 125,000 if you're single. So there are ways to get around owning real estate and also building that generational wealth. It's true what some of the gurus say. You can build generational wealth. I personally own quite a few investment pieces of property and I do have cash flow, but you got to know what you're doing and you have to remember that numbers tell stories. So Monica, let's say from a tax advisory perspective, what if someone comes to you and says, I'm a husband and a wife and I have a full-time job, but my wife doesn't work and we want to buy real estate. And what is this about? Do I have to have a real estate license to buy real estate?
You don't have to have a real estate license. Actually, if you are going to be investing on real estate, it's better not to have a real estate license. But you really need to get a real estate agent that knows what they are doing. Because once you have the license, you have to disclose everything. Like in my case, when I buy a property, I need to tell them, okay, I am a real estate investor and I am the real estate agent. So I need to tell them where I am, who I am, and whatever. But if you are a new investor, you don't need to have the license. You need to find an agent like Diva, me, somebody else that can help you, that knows what you're doing, and they actually can assist you to buy or do whatever you have to do with your property. That's the first thing. And everybody told me, but I never understood. So I went out and got my license, and now I am a real estate agent as well. Another thing, we need to make sure the finances are in order. We have to pay all the debt first, and then we can go and start investing. I have seen many people that come to me and they say, I want to invest on real estate, but they have so much credit cards, they have so many loans. So if they start investing, actually they are hurting themselves because that's not the proper way to start investing. The proper is take sometimes to cash flow. So sometimes it's better to start paying all the debt and then you can start investing. So we need to see your numbers. We need to see where you are, and then we will take you from there to where you want to be. Okay, Monica, I want to have 10 houses. Okay, how long do we have to get those 10 houses? It's not the same when we work with a person that only has one income, that when we work with high earners, that they have so much money available, and for them making an investment for $100,000 is easy for them, but it's really hard when we start with just one couple that only one of them are working and they have to take care of all the expenses and income. So we really need to make sure that you can qualify and you don't get in trouble, right? Because most of the time we start investing, we try to get together. Mm-hmm. But at the end, it doesn't work the same way. So I tell them, okay, first, when we are going to start investing, we need to make sure that we are where we need to be in order to start investing.
Well, thank you for sharing that, because that information is mainly for those that want to get into the real estate business as an investor, or even just to buy one home to flip. You don't have to have a real estate license. You can be classified as a real estate professional, and there's some rules to that. So please take a look at that, because as long as you can show that you have 750 hours invested, that you personally work on that property, you can be a real estate professional if you just have 1,100 hours more than
And you
anybody
can
else.
take all the
So there's
deductions
some
as well.
rules. There are rules to that. So just call us, email us, text us, or whatever you need to do if you want to know what those rules are for differentiating a real estate professional with a license, or just a real estate professional status, which is totally different on the tax return. But right now, what I want to do is I want to give at least some of those realtors that are out there, at least in Omaha, Nebraska. I don't know about in North Carolina, but in Omaha, Nebraska, we do have some rules, Monica, regarding wholesaling. So there are a lot of rules on that they need to go to a real estate agent. But for the real estate agents that are here, there are three different types of expenses that you overlook all the time. And the one that I want to share with you today is basically that home office expense that you can take. Because if you're a real estate agent and you're an LLC and you're just filing a Schedule C, that you're just a sole proprietor in your company, that home office is so important, that expense, because that unlocks a lot of deductions, right, Monica? Even if it's just, for those of you, by the way, and I got that feeling that you're thinking, I can't have a home office. My home is not open to the public. Well, it doesn't have to. You can have an administrative area in your home, an administrative office where you do all your paperwork. And all you have to do is you can measure that area where you put your desk and all your files. And Monica, right? Can you not take that as a home office? And what else comes along with that deduction, Monica? Tell them. For the
Many
home.
things, like we can deduct the before I forget, take a good picture just for IRS records. Take the picture, and please remember to remove everything that doesn't belong to the office. We had an audit, and the client had all the records, but they never had a picture. So with that one, that's a big issue for us, that we need to keep records of the home office. What do you do? Nothing else has to be on the office. It's just your office, just your computer, your desk. Nothing else has to be on the office, because that's the way the IRS is. Okay, if you have your office at the kitchen table, they're gonna say this is not allowable. So really, yeah. Remember, some people do that. So
Okay.
you have to have, yes, your office, even if it's a corner of the office. Nothing else has to be there. So just remember that. Take a good picture. Keep it there on your records. We don't wanna ask for. We are not IRS auditors, but in case that you have an audit, you will need to prove that you had an office at your house, and it's just for exclusively use of your in this case your business, right? So that's really important for us to do it.
Okay, so when I look at the home office, I'm not expecting to see the let me see, the kids' toys all over the place, because now you have a little daycare going on. But okay, I get it. But then you can unlock the different expenses, such as on an individual tax return, you can't deduct your electricity, you can't deduct your water, you can't deduct your home insurance, right? But if you have a home office and you have that measurement, and let's say it's a 10 by 10 office, 100 square feet, you can take 10% of those bills and have them as deductions. So that's a big one. I'm telling you, the home office is the one that I see most realtors totally overlook, because they're under the wrong impression of what they can deduct. But Monica, isn't it true there's a simplified method as well? You don't even have to measure anything other than just say, okay, I take the simplified method. That's a $1,500 deduction right there, guys. Numbers tell stories.
That's, for me, for people that don't keep good records, it's really easy just to know, okay, this is my office, here's the picture, and let's take the simplified deduction. So for me, it's better. But some people like to keep the records, like to keep the electricity, everything that they can spend. Even if they change the carpet at the office, they can take the full deduction because it's a carpet for the office.
Absolutely.
So that's something
Absolutely.
that we need to consider when you want to have a nice office. Well, you need to have a really nice place to work. So that's another deduction that they can take.
Right, and that would be on the Schedule C for those of you that are out there that do have a home office. And you don't have to be a realtor. You can be an insurance agent. You can be a coach. Any other profession that you have that you do work out of your home. Take a look at that, at what it is that your accountant or your CPA or your preparer is putting on your Schedule C if necessary for home office. Okay, take the simplified method. We just gave you a $1,500 tax tip right there. So, Monica, how about the cell phone? What do you tell people about the cell phones?
Oh, well, it depends. If you use the cell phone for personal use and office use, we will take 50%, right? So just to be on the safe side.
Okay.
But if you have a home office and you have the phone for your house, and then you use the phone completely just for business, maybe it can be 100%. Maybe, I don't know. We will
Okay.
need to see.
Okay. And what I tell the first question I ask a person is, do you have a landline? You know, the old fashioned landline that's connected to your wall. Or now I have one
Right.
because I still have I have a security system that requires a landline. So if you have a landline, you can deduct 100% of that cell phone plan on your taxes,
Right.
as long
But
as you have a
now some
landline.
people have two phones.
Right.
Now some people have two cell phones. Like one is personal and the other one is business.
Right.
So they can
They
deduct,
could take 100% of that one.
right?
Yep,
Mhm.
absolutely. And how about mileage? What do you tell them about the mileage?
You don't know how I tell them, okay, you have to keep the mileage. You are saving so much money. You just keep all the miles that you drove, because that's something that we are just so what will be the word, that we are so the word just went away, but we need to keep track of all the mileage that we drive for our business. If you don't know, or if you are so lazy, that was the word, if you are lazy to keep the mileage, just get the app on the phone, so the app will take care of it, so you don't have to worry about how many miles I'm driving. You just need to make sure that it's business or it's personal, and then you will have a record for the IRS to keep up, and that will give you money. So many people don't know how to save the mileage. That's really important. Go to your app store, download the app for the mileage, and you just keep on it.
Yeah. I use that mileage IQ, guys. If you don't
That's
have
the one that
it,
you
go
put
in there
on.
and look for a mileage IQ, because at the end of the day, all you've got to do is take a look at, by the way, what it does, the way it works with technology. So as soon as you start driving X amount of miles away from your office, or from your home, excuse me, it'll pin you where you're at, and it'll start tracking those miles. And then when it stops for a certain period of time, it stops it. And at the end of the day, you look and you say, oh, that trip, it considers trips. That trip, that was business. Oh, that trip, that was personal. So you'd be surprised. And at 60 somewhat cents, 65 cents a mile, you're losing a lot if you do not track your miles. So we gave you 3 good tips here. Let's see. Do we have any questions out there in the audience for either Monica or myself? Let's see. Do we have anything
Well,
in
I
there?
have a question that everybody tells me, what's better for me, like Diva? Some people start looking at invest on real estate and they say, what's better for me? And I just tell them, okay, what depends on you is not the same for me. In my case, I prefer to buy and hold. It will be considered long-term rentals, because I like that. I like to have a person that is living on the property for the full year, and I don't have to worry that I'm gonna be renting the property every 5, 6, 7 days. But that's for me. That works for me. Some people prefer to do fix and flip. Other people prefer to do the short-term rentals, that they get a lot of deductions, but at the same time they have to work more. So in my case, I will prefer the long-term rentals. So
Okay.
when they start asking, each one of these is a strategy. So which one do you prefer? It's not the same for everybody. So you just need to be sure that you are learning what do you really want to do.
Yeah. I tell I tell folks this, look, there is a difference between a tax preparer whom at the end of the year, things have happened in your life. And at the end of the year, you take all these records and numbers to your preparer, and your preparer gets paid so that they can put those numbers correctly on your tax return, right? Now, there's a difference. We are certified tax advisors. What Monica and I do for a living is we're kind of quarterbacks now. We take the ball and we look around similar to like football, right? And we look at your situation individually, and then we start doing plays and we say, okay, this play is going to give you this based on what you have in store, what your goal is. So Monica, do you have a lot of tax advisory clients that may be in the same situation, but you have to tweak because some of them are all different? Everybody has different numbers. Everybody has different plays.
Yes, everyone is different, so we need to treat them different. Like every case that we are gonna be working, we have to look just at the person, just at the finances. It's not like one size fits all. That's completely different. So what I tell people is that they need to come to us before they start doing it, not after. When they come to me January 1st, 2024, it's too late to plan for 2023. What happened is already gone, so we need to start planning for 2024 now. So that's what I tell people.
Absolutely. You're absolutely right. We are in a different world now. As tax advisors, where do you see the tax industry going, Monica, in the next year or so? I mean, now you turn on, Facebook, and we are on live. So thank you for those of you that will be watching this either live or even a recording. And if you do see this on a replay, please put in the comments that it's a replay when you do see it, and this will we gauge who's watching and who isn't. But what do you think is going to happen to the tax advisory or even the tax preparation moving forward in the next year or so?
Well, I feel tax preparation and it's gonna be like a lot of technology is coming into. It's gonna help us, but at the same time, I had a teacher at the college that I was saying garbage in, garbage out. If you don't know what to enter into the software, what you're gonna get, it doesn't gonna make sense. So what we need to do is we need to start working with the technology. We need to know how the technology works to make our life easy, like the mileage. How many people don't save mileage just because they say, oh, it's too hard to get the numbers. It's too hard. I don't remember to write when it has already passed a month or 2 months and I don't even remember where I went. Your phone knows where you were. So if you really want to know how many miles are you driving, I had a guy that told me, Monica, last year I drove 100,000 miles. And I told him, what? How many miles do you say you drove? And he said, 100,000. Well, we went back. We checked all the oil changes. We checked, okay, I learned last year how many miles can a tire last. In that case, that tire, they last 60,000. So I told him, if you don't change the tire, you never drove 100,000 miles. So we started looking at how many miles. And at the end, he said like $27,000 just on the mileage record that he created. So
awesome.
You are missing a lot of money on just keeping the records. And that's what I tell people.
Yes. Okay, so I think I think there's Miss Liz wants to ask a question. Hold on a second. Let's see if we can pin her. Don or Rich, can you pin Miss Liz? Oh, I got it. Okay, there we go. Miss Liz, what question do you have?
I was okay. So listening into the whole real estate and write-offs, right? How we are able to leverage, all these deductions. One of my questions that I was just recently approached by with a client of mine is he flew over to Atlanta, Georgia on Thursday, went to look at some properties. On Friday, he has another property to view on Sunday, and then he flies home that Sunday. He said, am I able to write off the entire weekend for a business expense?
Oh, okay. Did he buy the property?
He went to go and he went with the inspector to go and do a pre-inspection before actually buying. He went with the contractor to see what it was going to cost to do the actual repairs before buying the property.
But he submit up an offer, or he just went to look at the property?
He went to go and inspect the property, and he hired a contractor to go out there and
Yeah.
give him an estimate
Okay.
of what the expenses were going to be prior to purchasing the property, so that he can give an offer on the property.
Okay. How many properties does he have right now?
He currently owns about 25 properties and growing.
Okay. Because in that case, he already has properties. He already knows. It's important to know that it's different when you are dealing with a person that is already an investor or is already has some skin on the game, because he already knows what he's looking for. That if somebody else comes to you and they don't have any properties at all, and they say, "Oh, I went to Florida to look for properties," and they explain the same situation, you just sometimes that doesn't gonna fly, because the IRS is gonna be like, "Okay, did you buy the property? Did you submit an offer on it?" But in the case that you are explaining to me, because he's an investor, he already has properties, that will that will be considered like a business expense. And if he goes and submits an offer, that completely brings the write off for him. So
Okay, so the idea, let me just to clarify, he owns 25 properties here in San Antonio, Texas. This would be his first out-of-state property, right?
It's okay.
Very first one. That's why he was asking that specific question. But because he already owns property, it basically solidifies his title as an investor, showing that he's running it as a business. So then on the flip side, for a person who is just starting and ends up buying a property or ends up looking for a property outside of the state of Texas, is that going to be a tough one to prove that it's business?
yeah,
Okay.
It is, but you know what I tell my clients to do? Okay, there's always never say never. Just say, let me see how we can do it, right? Okay, the way you would do it is you tell your client, if you are going to do this, at least 2 or 3 weeks in advance, send an email to that realtor that you're going to go meet. Now you have a pre-established reason why you're going out of town to meet with someone. That email is your verification. So establish your meeting dates, right? And then when you're there, make sure, I don't care if it's a selfie that you take. Hey, look at this. Let's take selfie. But document that you're there. And you mentioned Thursday, Friday, Saturday, and Sunday. So did this
Not
client...
Saturday. Saturday, he does not have any business activity on Saturday, but he does on Sunday.
Okay, because
so his question was, may I write off the entire weekend, since I'm going to be there Thursday, Friday working. Saturday, I don't have an appointment, but on Sunday, we have the appointment with the contractors.
Well, I'm sure Monica, you would agree. The flight going and coming back, it's tax deductible. There's no way they're going to stop because of one day he didn't do business, right? But the day he did not do business, I urge you to talk to your clients and tell them there's always a reason to do business when you're away, okay? Don't just say you're going to go to the beach and drink, pina coladas or margaritas on the beach and waste that day because when you're traveling, there's different rules, and Monica can contest to this, but the different rules for the meals and the percentage you can take on travel meals, right? So there's no reason, Ms. Liz, that client could not take that whole trip other than that the meals on the day that he took off.
Okay. All right. Thank you so much, Ms. Diva. Thank you, Monica.
You're welcome.
Anybody else? Do we have anybody else that has a question here? So we don't have any other questions. So Monica, any last minute advice that you can give everyone?
If you are interested in buying and selling, or just start investing on real estate, even if it's your own property, I tell people, don't be scared. Markets go up and comes back. So maybe you are buying right now and you are scared because the interest, like I told you before. But don't worry, the interest can come down, but the people that are gonna be buying properties are gonna be more, because everybody's gonna look at the interest and they're gonna be like, I wanna buy this property now. So sometimes it's better to have the interest high because you don't have so many people bidding against you. So I tell people, okay, start looking at properties now. Don't look on April, don't look on May because all the people that want to move into the state, into the neighborhood, are gonna be starting looking at houses as well. So the best moment to buy a property is when nobody else is buying. So
It's now.
that's what I tell them.
Is now. And I know that we have a lot of some loan originators in town that I know personally that people are asking them, hey, the interest rate's going up. What should I do? What should I do? They say the same thing. Now is the time to invest in real estate. I can't thank you enough, Monica. Thank you so much for joining the Divas Two Cents and allowing the audience to get a little glimpse of what tax advisors talk about, what area, what direction we're going. Remember that numbers tell stories. You need to know yours. And Monica, thank you so much for all of the time and effort. And one thing that I chuckled earlier today, someone asked me, they not only asked me the difference between the preparer and the advisor, but they also talked about, well, I went to this advisor and he charged me X amount of dollars. And I thought that was excessive. And the answer that I gave, and Monica, you can chime in on this, was when you go, because accounting, tax preparation is almost becoming a commodity, right? So people look at price and they're always shopping price. But like you said, Monica, you get what you pay for, right? And 9 times out of 10, when you're talking to a professional in any industry, whether it's the mortgage industry, the real estate industry, the tax industry, and even doctors, right? If you have a heart problem, you're not going to go to the cheapest doctor that you can find, right? The one that bought the certificate from an online school somewhere in another country, right? You're going to go to a professional. Seek professionals that at least have a vested interest in what you want to do, what the goals that you have, so that you can accomplish what you have to accomplish. So I am so grateful to you that you do your due diligence, all of the years of study, all of the nights taking these tests that we continuing education credits force us to do. but I thank you so much for joining us. And for those of you out there, if you have any questions now, Monica, how can people get a hold of you?
Okay, my Facebook page is Monica Mendez EA. You can follow me there, or you can look at my webpage, monicamendezea.com. It's easy. So you can just go and send us a chat, send us an email, tell us that you want to talk about real estate investing or you want to talk about taxes. Not everybody wants to talk about taxes, right? But it's a necessity that we need to do. In respect to the information on how much do we charge or why do you charge so much, it just depends. Some people are wants to pay the lowest price for their advisors, but let me tell you, the advisors need to keep educating. We need to spend money to bring you the news. We need to spend money to go to the conference and find out the solutions for your problems. When you come to us, most of the time, it's just you just come with the problem and you don't know how you're gonna get out of the problem. Sometimes you had a messy books. Sometimes you don't have all the information. You don't know how the mileage work. You don't know what do you need. I got a guy that he has been working with me for 5-7 years already, and he sent me a text. Monica, I need you to prepare my taxes. What do you need? And he doesn't even know what do I need, and he has been submitting taxes to the IRS for 20 some years, and he doesn't even know. So those kind of persons need education, need to know what do you need, how do you need it, what way do I have to present. So when we have something, a letter from the IRS, you don't get scared from the IRS. Okay, it's a compliance audit. Let's send what they are asking for. Instead of some people that doesn't even know what they are presenting. And when they get a letter, it's really expensive for them because they don't have all the mileage, they don't have all the records, they don't know what was presented on those taxes. So I tell people, okay, we need to be in compliance. So when you get a letter, you just know that you're just going to present the letter and nothing's going to happen. So that's for everybody, every business that is out there. that we just need to make sure that we are doing the things that we are supposed to do.
Thank you so much. Thank you. And that kind of wraps it up, guys. Here we will be here every Friday to have different topics for you, just to chat, just a simple chat, nothing fancy, nothing grandeur, just one-on-one. And that, my friend, is Diva's 2 cents.